But good morning, everyone, and welcome to TechCabal Live, our fintech series. Today's session is on regulation and innovation and finding common ground. It's an excellent panel of very august people with a lot of experience across industries. We're really excited to have regulators, to have operators, and to have government within this particular session. I think it's going to be a really interesting one, and we are quite excited to have you all here with us today. Today's session is brought to you by TechCabal and the TC Insights unit. We have a few partners on there. So the event is in partnership with EFINA, the Fintech Association of Nigeria, and McKinsey & Company supporting us as an insights partner. So McKinsey & Company are providing expert insights for this event. Nigeria's youthful population are increasing smartphone penetration, the focused regulatory drive to increase financial regulation, cashless payments are combining to create a great recipe for a thriving fintech sector. As Africa's largest economy and with a population of 200 million people, 40% of who are currently financially excluded, Nigeria offers significant opportunity for fintechs across the spectrum, and you can see them already solving a wide range of interesting problems. It's here that McKinsey & Company sort of does extensive work to help shape the digital financial services ecosystem for the benefit of all stakeholders. EFINA, which is Enhancing Financial Innovation and Access, is a financial sector deepening organization. They promote inclusive finance in Nigeria. EFINA is renowned for providing thought leadership towards achieving financial inclusion and for championing the unbanked. By funding and catalyzing innovation, providing cutting-edge research, advocating for inclusive policies, and building capacity, EFINA has gained a reputation as an honest broker among both the private and the public sectors in Nigeria. So we're glad to have them here as well. The Fintech Association of Nigeria is a self-regulatory, not-for-profit and non-political organization with the mission to foster an ecosystem that supports all stakeholders to achieve a thriving and growing fintech industry. So we're really glad to have these three really important organizations with us here this morning, along with all of the other exciting speakers. I'll tell you a little bit about TechCabal and TC Insights because, we should say a bit about ourselves. TechCabal is a leading publication covering the players, the impact, and the business of technology across Africa. Our goal is to provide the content, the reporting, the data, the events like this one, and the context to help the world understand how technology is changing Africa. We frequently speak to specific countries, so we do sessions like this that are Nigeria focused, or we might do a Nairobi or an Egypt, Cairo focused event. But broadly as a publication, our goal is to provide context for what is happening across the continent, to find the commonalities and the things that are interesting from different countries, and the trends that show where it is that we are going. TC Insights, which arranged this and organized this event and organizes all of our events, is our data research and our intelligence unit. It provides actionable data on startups and the tech ecosystem across Africa to investors, to entrepreneurs, to big tech companies, regulators, and other players on and off the continent. They also handle the job of convening people at events like this, our Future of Commerce conference, and many other events. So super important units to the work that we do, and we're happy for the work they've done on this particular event. I will speak very quickly to how the event will run. Over the course of the next sort of 90 minutes or so, we will have interesting conversations as well as a Q&A around regulation and how to sort of build an environment that works for fintechs and to promote financial inclusion and to build an economy that works for us all. Specifically to get started, Oswald, Osarate, Guobadia will give us a keynote address. I will leave the proper introductions of all of the august people to Topsy, to Mayowa, who will do those introductions in a moment. So Oswald will do the keynote, and then Topsy Kola Oyenei, who's the partner and co-leader at McKinsey, of the payments practice at McKinsey, will do a quick context setting presentation. Mayowa will then introduce the panel in a bit more detail than I'm able to do. We'll have a 50-minute conversation with my moderating and asking the panels some questions that we've prepared ahead of time. And then we'll have a Q&A that should take about 40 minutes. Thank you all very much for joining us today. I'm really looking forward to this session. If I can hand this over to Oswald or Guobadia to give us the keynote. Oswald.
All right, Tobiwa, thank you very much. Really glad to be here today. Such an interesting topic, talking about innovation and regulation. Can you hear me well? Can you hear me good?
Yes, we can.
Okay.
Is it loud enough for everyone?
Yes.
Excellent, please.
Okay. All right, great. It's such a pleasure to be here this morning. I did virtually. Thanks to TechCabal for having me today. I'm honored to be in the midst of such important speakers to discuss an equally important topic. It's one that's hung like a cloud over Nigeria fintech industry. And as such, conversations like this are important and they must have. So I'd like to say thank you to everyone who's tuned in today. Quite a number of us in this session today are Nigerian, but I want to assume that we know fully what the Nigeria Startup Bill is about. But I hope that we at least have heard of it, right? Because we've been doing a lot of awareness and a lot of campaigning. And we would love to think those things are very effective. To simply put, the Nigerian Startup Bill, or the NSB as we like to call it, is a set of laws that will guide the activities of startups, both the ones that exist now and the ones that are yet to be built. The NSB is championed by the presidency and members of the Nigeria's tech ecosystem. With this bill, we hope to address pertinent issues affecting tech startups and tech-enabled companies. These include the lack of an enabling environment and regulatory uncertainty, which I believe is very key in this conversation today. I think the more intelligent people would say is germane. The bill will drive collaboration between the public and private sectors to draft and pass laws that are clear and consistent, as well as address the interests of both parties. Earlier this year, I believe it was in May, on this same platform with the great TechCabal DJ, we had a session just like this one organized by TechCabal. A number of stakeholders in the public and private sector gathered to discuss the bill, what it meant and how we go about it, and how we could make it better. People shared their concerns and suggestions as well. It was a really engaging session. A lot was said during that session, but one thing that was clear at the end of that meeting was that the NSB would be a critical move for the digital economy. Now we're closer than ever to the bill being signed into law, and that clarity remains constant. As it stands, the bill should be in the Federal Executive Council next week, so we're hopeful that it passes that stage and it ultimately will move to the National Assembly. So once that happens, we need to engage further to get ourselves to a position where this bill is passed into law. In all the months of work put in by the presidency, leaders in the tech industry, and several other key stakeholders, we cannot deny the need for collaboration and engagement at all levels. We call it the big tent approach, where everyone from the presidency to wider government agencies, venture capital investors, media organizations, law firms, academia, are all playing clearly defined roles towards a shared goal. Perhaps NSB will still be at deliberation stage if these categories of people have not pitched in to make it work. In fact, for those of us working on the NSB, we have come to discover that the ecosystem does not only comprise of practitioners or operators, but includes regulators. It's a system that has, basically, the ecosystem has two sides to it, not just one side, and policymakers, as well as other stakeholders have outlined. This is an important stepping stone for today's conversation, where we discuss how regulators and fintechs can collaborate to make the industry work. Fintechs and regulators have had quite a few misunderstandings and run-ins because at one point or another, either side failed to see issues from the perspective of the other. This mostly strained relationship is not good for anyone, the practitioners, the regulators, or the consumers, who end up being the grass beneath the two elephants while they're battle. We need to see the digital economy ecosystem not as a fighting ground, but as a playing field. That's where we should begin. Innovation may be the front runner of regulation. We hear this a lot, but that only works when there's a playing field. or as we have tagged in today's conversation, a common ground. Otherwise, operators will see their innovations as being disruptive, while regulators will continue to only see their innovations as being displacements. Leading to both sides being at loggerheads, thus engaging with the learning from one another is crucial. It's critical that we educate each other. Nigeria's rapidly growing fintech industry is key to the financial services sector. From payments to wealth management, cryptocurrency, lending, insurtech, and so on, there are several opportunities yet to be untapped in increasing financial inclusion. There's also so much growth potential for existing and new players. Today, Nigeria boasts of 2 indigenous fintech unicorns, and we're hoping for more, and about 250 fintech companies. We're hoping for thousands. But this time in 2018, there was no such thing. If we have achieved this under this current regulatory atmosphere, then how much more would be possible when fintechs and regulators sit down to discuss how to move the industry forward? Just exactly as we're about to do today. It is important that we listen to and take part in this conversation with an open and positive mindset. All over the world, governments are central to enabling innovation within their countries, the playing field, the common ground, and the Nigerian government is no exception. Contrary to what some have come to believe, the Nigerian government is quite keen on making laws work for startups. The NSB is a yielding testament to this fact. So I enjoin everyone who's here today to approach this session with that thinking. I'm glad that we have Pilkis from Lithuania, who can share more on what has worked in Lithuania, why it has worked, what we can learn from that. I'm excited to listen to all our panelists today, and I believe it is a super insightful session. Before I hand over to Topsy, I would like to encourage everyone that's here today to support the Nigeria Startup Bill, spread the word, both physically and digitally. Get involved one way or another. We're still taking volunteers. There's a lot more to do. You don't have to own a startup to contribute to the success of the NSB. For the Nigerians in the audience, the bill is now at a stage where we need you to engage representatives in your different constituencies across the country. Pull in your senator, pull in your House of Rep. Make sure everybody knows about the NSB within your networks, WhatsApp groups, and other social media platforms. For a bill of its importance, there's no such thing as too much publicity. Thank you very much.
Thank you so much, Oswald, for sharing on the startup bill. And I think that is an extremely important bill, and one that I hope so many startups, especially fintechs, and just Nigerians who are interested in the development of Nigeria will get involved in, because it's that important. So before we get into the session, I wanted to share a few thoughts to help set the context for what we're discussing and why we're discussing it. This is a topic that is very dear to my heart, as someone who's very interested in sort of the fintech ecosystem, but also as someone who's had the privilege of being on both sides, having had the privilege to work with the regulator and sit in the regulatory shoes, and also on the private sector side, work with businesses that have been involved in innovation and launching products into the market. And so today, when we talk about finding common ground, we thought it would be useful to set the context of how regulators think and what they're trying to achieve. What do innovators think? What are they trying to achieve? And where do we see some of the common ground, even though the approach is typically different, right? And that's what hopefully when we get into the panel, we'll be able to discuss a bit further. So on the slide, we've tried to sort of lay out a very simple schematic that sort of tries to paint the picture. On the left-hand side, you see sort of the regulatory side, right? And with regulators, at the end of the day, they're looking for economic growth, right? But in terms of how they think of economic growth, they are thinking of levers around economic stability. They're thinking of things around compliance. That's very important for economic growth. They also have a national development agenda, which is typically very different from the private sector. There are national development things that a regulator is trying to achieve and must achieve for the benefits of the broader society. So that's also part of how a regulator thinks about economic growth. And obviously there's also the component of an enabling environment, which goes beyond just sort of maybe a specific policy, but thinking about the enabling environment that would support the agenda for economic growth. On the other side, when you think about innovators, at the end of the day, what they're also thinking about is growth, right? Whether that's growth in different forms, but the net sum is economic growth. But an innovator goes about that through different levers. They think about how to create simplicity, how to create speed, how to create convenience. An innovator is focused on solving problems. How do they eliminate bottlenecks, which at times could also be in direct contradiction or in direct conflict with economic stability and compliance and rules, because they're actually trying to eliminate these bottlenecks. An innovator is very obsessed with meeting the consumer needs. In fact, their whole theory of growth is dependent on being able to meet the customer's needs. And so that's really their obsession. That's where they focus, and less about different rules and things that need to be complied with. An innovator needs access to funding. And I'm happy on the panel we'll also have an investor perspective, but it's also important, therefore, what investors require to be able to innovate, to be able to provide those funds that enable innovators to do what they do. So a lot of times when we think about regulatory policies, it's not just the policies that affect the innovators, but it's also what investors would look at and how that ultimately affects innovators. And then last but not least, innovators are about leveraging technology, right? And if we all know about technology, the reality about technology is that it's constantly changing. It's very difficult to keep up with, and it's things that everyone is still trying to understand, right? Which also makes it a bit difficult to regulate. So those are the two different sort of angles that regulators come from and innovators come from in terms of achieving economic growth. And so when we go into the panel today, what we're really trying to understand is how do we find this common ground that enables us to balance what needs to be achieved from a regulatory perspective and also for the good of all the different stakeholders that operate in the ecosystem, and what innovators really need to thrive. If we look at Nigeria, and it's not on the page, but if we look at Nigeria, we know that there have been a number of regulatory initiatives that have actually enabled innovation, either intentionally or by default. And I'll give a few examples. When we think about the BVN and what it's enabled in terms of onboarding and the growth of apps and things that fintechs have been able to provide just by that single sort of policy regulation and that was implemented. We also think of what's a more recent one in terms of SANEF and what that has driven in terms of the POS and agency banking business. We've seen a whole sector being created, booming by that sort of regulatory policy and regulatory focus. Of course, there's also been things like the regulatory ban on cryptocurrency. And in some ways, some people would say that has enabled innovation in another form. It's forced people to come up with new business models to basically work around that regulation, right? So we know that regulation can enable businesses. It can also destroy business models. And in destroying business models, it also creates new forms of innovation. And these are all of some of the things that I would love to discuss and get into on this panel. And the goal is that by the end of this panel, there should hopefully be a few specific action items that we can take forward that helps create a better space for innovation in our ecosystem. So without much further discussion, I'd like to hand it over to my partner colleague, Mayowa Kioro, who would lead the panel. Thank you.
Thank you very much, Topsy. Good morning, everybody. It's a pleasure to be with you all this morning. I'm going to just briefly introduce our panelists and then we'll go straight into the questions. So joining me this morning is Mr. Musa Jimoh, who is currently the Director in charge of the Payment System Management Department at the Central Bank of Nigeria. The next speaker I would introduce is Mr. Emomotimi Agama. I hope I said your name correctly. He is currently the Managing Director of the Nigerian Capital Markets Institute, but recently was the Head Registration Exchanges and Market Infrastructure and Innovation Department. Third speaker this morning is Dr. Ola Brown. She is the co-founder of an early-stage venture capital firm, Greentree Investment Company, which provides growth capital to some of Africa's most exciting tech startups. Also on the panel with me today is Mr. Razaq Ahmed, who is a co-founder and CEO of Cowrywise, which is a fintech company digitizing the investment management industry in Africa and democratizing access to savings and investment products for the growing population of the underserved African middle class and millennials. Also this morning, we have Ashley Immanuel, who is the CEO of EFINA and who's one of the partners sponsoring this event. She oversees EFINA's work to drive inclusive finance in Nigeria and supervises EFINA's market systems development approach including conducting research, advocacy, capacity building, and driving innovation through EFINA's Innovation Fund. And finally, I'd love to introduce Martynas Pilkis, who is an advisor to the board members at the Bank of Lithuania, the central bank, and an integrated regulator part of the Eurosystem. He is the head of the Innovation Committee and oversees a number of innovation activities within the institution, and is also taking part in fostering a fintech conducive regulatory and supervisory ecosystem environment. So join me in welcoming our distinguished panelists this morning. So I've just been informed, sorry, that Musa Jimoh is being represented by Dr. Akin from the Central Bank of Nigeria. Good morning, Dr. Akin. Great.
Good morning.
Good morning, thank you. My first question will be directed at you. Can you tell us how regulators and innovators work closely together on fintech regulation in a way that is beneficial to all?
Thank you very much, Maya. Well, over the years, we've had a platform for collaboration between the regulators and innovators. Even when we don't have them in the numbers, we have them now. I recall very well about 2007 or thereabout, there was this Payment System Vision 2020 that was released by the Central Bank of Nigeria. It wasn't just developed by regulators, it was developed with those would call the innovators within the space at that time, banks, and I think maybe a single infrastructure provider that was available at the time, right? And leading into that, we went into mobile money operators regulatory environment. And to develop that, we also called on innovators. We called on the likes of the InterSwitch. We called on the likes of UP as at then. We called on banks. We called on a broad spectrum of stakeholders, including even the NCC. And we really hoped that we had the telcos also with us at that time, even though they didn't turn up. It was a rigorous process of discussing over time how should we implement mobile money in Nigeria. Eventually, that gave birth to innovators within the mobile money space. And down the line, not long after that, we had other regulations coming around electronic payments of government supplier payments and the likes, giving birth to the Payment Solution Service Provider license category, where we now have a big boom that has finally resulted into a lot of innovation spurring initiatives within the Nigerian payment system. So we have always engaged. We continue to engage. In recent times, we released the open banking framework. And as we speak currently, I think exactly yesterday, we still had interactions with players in the industry to discuss how we're going to implement this. And these players cut across fintechs, payment service providers, banks, infrastructure providers, and the likes. And this is our approach. We believe that we don't know everything at the central bank. We may not understand your perspective. We want to harvest ideas from innovators, and we've always created the platform for that. So for all our regulation, we engage. We have opportunities of releasing exposure drafts. Exposure draft is a mechanism that we use to harvest ideas across board, and we discuss major issues with industry groups to ensure that we're all on board before a regulation is issued. And if you look at what has happened between 2009 to date, our regulations seem to have encouraged, in many respects, innovation. And that's why we have seen growth in the numbers of those participating within the non-bank providers of financial services participating within the banking space today. I guess I'll leave it at that for now. Thank you.
Thank you very much. Ashley, I'm going to come over to you because I think you have a unique position of interacting with various different stakeholders and the clear mission of financial inclusion. In your view, how do you think we're doing? So, what are you as EFINA doing to bridge the gap, and how can sort of other ecosystem participants help to find this common ground?
Thanks a lot, Mayowa, and very good to be here with you and all of the esteemed panelists. So good morning. I think that events like this are really important in highlighting the sort of power of just interacting and communicating. Sometimes I think about a quote from George Bernard Shaw that the only problem with communication is the illusion it's been accomplished, which is something that I've seen quoted in different kind of corners of the development sector, just to remind us that we think we're interacting, but I think you can never kind of communicate too much. So for EFINA, one of the things that we've done is, we've done quite a bit of research, including some in-depth research, which we partnered with McKinsey on, as you know, on the fintech sector, and its potential for financial inclusion. But we also tried to convene different stakeholders in events such as this, just to have some more open communication, jointly sort of identify barriers as well as opportunities for driving more inclusive growth. And really kind of, I think the slide that Topsy presented sort of showed nicely that there are a lot of mutual interests, right, of all parties here. And I think that all parties are also really interested in taking the time and coming together and driving toward that. So I hoping today we can identify some of the low-hanging fruit in doing so. I think in addition to EFINA, as Dr. Ekin mentioned, the regulators are already taking some important steps in really consulting the industry as they move forward. I think that there's some other partners like industry associations that are also doing some good work around convening and communication, and I'm hoping that we can really accelerate that as well. So maybe I'll leave it there for now. Thanks, Mayowa.
Thank you so much, Ashley. I'm going to come to you, Razaq, as a fintech founder and CEO. So for people we're talking about, let me ask this question. How do you think, or what role do you think fintechs have to play in creating the common ground? Because sometimes there's a sense that there's somewhat of an adversarial relationship, which by no means needs to be the case. So in your view, what is the role that fintechs have to play in creating this common ground we're talking about?
Thank you. Okay, I think the first thing to have in mind here is what currently exists between the regulators and the fintech innovators, or even players generally, not just the perceived innovators right now. I think there is a need to build trust between the two parties. There seems to be a trust gap between how regulators think and how innovators think. And I think that trust gap is man-made. It is not meant to be. And the reason why I said that is when you look at the shared vision that the regulators are after and the innovators are after, I think there is a natural common ground. I'm picking from what Topsy presented earlier, for example. Regulators have mostly focused on stability of the system, economic growth, national development, which are important mandates to actually pursue. But from innovator standpoint, innovators are more concerned about how to build how to address micro behavior in order to achieve that macro objective. So because we operate within a private sector-led economy, so to speak, every innovation is actually a contributor towards the achievement of that economic growth, that the economic development that we're heading towards. So there seems to be a contradiction, but in reality, there is actually a shared vision, because when you have a lot of innovation happening, definitely there will be economic growth. Regulators are meant to, provide the enabling environment for that innovation to happen. So even though it looks like the objectives are different, like on two extremes, they're actually the same objective, right? I think that's important element needs to be addressed in terms of trust building. And this is not just something that falls on the regulators alone. It also falls on the innovators. There has to be an assumption of best intention when discussions of regulation, are being tabled. So innovators need to assume that regulators have their best interest at heart. So right now, if regulators say A, innovators will do B, just because there is no that trust between that relationship. So that's the first one. The second part is the need to actually understand that there has been very deep structural changes within the economy over the past 10, 15, 20 years, right? And the structural changes we've seen, those are the things that actually facilitate innovation, are the things that propel innovation, right? It appears that innovators do not believe regulators actually appreciate the depth of that structural change that has happened. Which is why, for example, when you are innovating based on current trends, so innovating based on the technology available to you. But interestingly, the regulation might not have captured that current trend because we all know regulation is written. But the most important thing is that what is written in regulation, the philosophy of it can be changed. In 100 years' time, it won't change. What usually changes is the how. Say, for example, a KYC, regulation around KYC is a fundamental piece of regulation. It doesn't matter whether you're using technology for KYC or you're using a manual process for KYC. KYC is KYC. You need to know what has changed in the past 10 is how. Who meets my customer physically to conduct KYC, or can I leverage a technology infrastructure, a digital infrastructure to do that? And I think having that understanding is what needs to happen. Nobody, I don't think any innovator who actually wants to build a sustainable business will go against the idea of knowing your customer. The major argument usually will be how will the know your customer exercise be conducted. So I'll leave it there for now, and hopefully expecting more questions.
Thank you very much. I like what she said, which is this whole premise of assume good intentions, right? The two-way relationship and the two-way trust. So there's some trust. The trust equation needs to be built between, I actually don't even think, I actually wouldn't even want to say regulators and innovators, because in some respect, I'm sure if you ask Dr. Akin, he will see himself as someone who's trying to innovate the financial system. So that the equation of trust between the practitioners and the regulators, I think, is very important. Dr. All, I'd really love to hear your thoughts on this issue. Topsy and I, over the last couple of years, have been serving investors who are doing due diligences on fintech companies, and without a fail, every single one of them always asked about what is regulation, how is it changing, what is the potential impacts of regulation on the businesses. So as an investor, how do you view sort of the role that regulation has to play in the sort of the run room for businesses you invest in, and how, does that change sort of market by market as you go across the continent?
Fascinating question, and because anybody that started life as a medical physician, I did that for about a year, and then started an aviation business, heavily regulated. And then started my career in finance, obviously, and invested primarily in fintech and healthcare, two highly regulated sectors. We have investments in pharmaceutical manufacturing, we have investments in diagnostics, we have investments in hospitals, and obviously we have investments in financial services as well. So lots of different sets of regulators and some of the most tightly regulated sectors. So my career as an investor has sort of been shaped by regulation and by changing regulation. But your question was really about how investors see regulation. And I think there's two ways that we see regulation. We definitely see it as a good thing because number one, it protects quality. It makes the barrier to entry higher, which makes sure that anybody that's playing in a certain sector adheres to certain standards, which is good for everybody. And number two, particularly for the financial services industry, it protects stability, right? And the reason why, sort of in terms of the history of banking and how history has evolved in banking, even looking at the international settings, it's always been a wave of innovation that's kind of destabilized things and the regulators kind of struggling to keep up with it. I have a video on my YouTube channel on how Basel I, Basel II, and Basel III evolved over time. And all these international regulatory pieces evolved because they thought they had put a good piece of regulation in place, and then suddenly there was an innovation. And there was an innovation in the financial services sector, which left global regulators kind of struggling to understand it and sort of prevent a form of instability happening. That's how regulation happens, and it usually lags behind the level of innovation. So with that context, how does it affect our decision making? I think as investors, we're always looking for regulation that protects our investments and provides an equal playing field. So I think from my perspective as an investor, and I'm not speaking for all investors, we're looking at regulation in a broader sense. So we're looking at what are the tax regulations, for instance, what's the ease of repatriating money to perhaps the place where our vehicle is domiciled. And then we're looking at the more specific microprudential regulation as well. But what we're looking at is stability in terms of the regulation. So a clear set of regulations where we can be very engaged or have a level of engagement with the regulators. And it doesn't change too rapidly. And those changes are predictable. And so I think there's an impression that we don't like regulation. That's not true, because if you don't have regulation, then the market will be a free for all. You have competitors coming in from every angle. You have all kinds of shady practices. Of course, we want regulation, but we always also want the opportunity to have some form of stability in that regulation. We also like engagement. But I think engagement is a two-way street, as Dr. Olubukola said at the beginning, right? It's important that we also learn to engage. And I think he mentioned that, he was trying to engage, the regulator was trying to engage, and perhaps some people didn't quite make it to the table for some reason. So I think it's important for us as investors and as portfolio companies to try to engage. But I think probably as a fintech investor, I would say, in terms of the grand scheme of things that we do, and in terms of like making investment decisions, the regulatory environment in terms of stability, not the presence of regulation itself, but the predictability of that regulation and the opportunities to engage to help shape that regulation are really important. And the last point I'll kind of make about regulation across Africa, because we do invest across Africa, not just in Nigeria, is that when Ashley was speaking, I started thinking about when the members of Congress were speaking to Mark Zuckerberg about regulation of Facebook. And even though most of those congressmen all went to like 6 of the top universities, not just in America, in the world. And they probably have like 2 or 3 research assistants from the best universities in the world advising them on what questions to ask. They still seemed confused. And it was almost as if they didn't really understand what Facebook was doing. And even though, they had had weeks to prepare, they still seemed ill prepared for the engagement. So when we're also speaking to perhaps some of our representatives here, we also have to remember that they're definitely from more diverse backgrounds and perhaps don't have the support levels. I don't know any Nigerian politician that has 3 or 4 research assistants from Harvard just helping him to ask the questions that he needs to ask in policy. So we also need to bear that in mind when we're engaging and maybe even put that little bit extra work into our engagement efforts as well. Thank you.
Thanks so much, Dr. Ola. I like your point. Engagement is a two-way street, but also you need to know your audience and make sure that you're making it sort of easy to be on your side, if you get what I mean. Dr. Emomotimi, I'm just going to come to you now, because the SEC has been, working quite closely with and launched a number of initiatives to assist fintechs in understanding their regulatory obligations, including FinPort and the Regulatory Incubation Program. Can you maybe speak a little bit about these two initiatives and how successful they've been?
Thank you so much for having me here. This is a very important forum, more especially because one of the greatest challenges we've had in this space is the dissemination of information, and has been spoken to by Razaq, Ahmed, and a few others who have had engagements with the SEC. But they find out that after the engagement, I guess they are better off, and they are more in a better state to actually spread the news or the information. But speaking to your question regarding FinPort and the regulatory incubation framework, first and foremost, FinPort is only a page on our website that actually what it does is to be able to attract information, update information available for fintech regulation specifically, and whatever we need the fintechs to do. It's been successful because a critical part of regulation is information gathering or data gathering, because data is key. And a lot of the fintechs that we have had to review, fintech proposals that we have had to review, have actually come through the FinPort, wherein we had initially an assessment form that tends to actually assess the applicant or whoever intends to operate within the capital market space. Because there's always this confusion that every fintech should come to the SEC. No, that's not so. The fintechs that should come to the SEC are fintechs related to the capital market. And once there is no assessment as to what exactly you're doing, how does it relate to the capital market, how does it relate to investors, then it is difficult to actually know where you should belong to. So that is the essence of the FinPort. So in my estimation, it's been successful. We've been able to review a lot of applications and give advice as a follow-up to where exactly you should fall into or what you should be doing as a fintech. But once it relates to the capital market, we also are able to direct you properly as to what you should be doing, the functions you should actually be applying for, the ones that are coming, the ones that are non-existent, and whatever challenge that needs to be addressed is properly addressed in that light. Speaking to the regulatory incubation framework, that is speaking specifically to what you can call a sandbox, or what people call sandboxes in other jurisdiction, or innovation hubs in other jurisdiction. And the essence of that practically is to be able to get people who have an idea regarding a fintech that they supposedly think will fall under the capital market, and possibly there are no regulations as of today, because like someone said earlier, I guess it was Dr. Brown, said that innovation precedes regulation. More often the time, that is the case, because for the regulators, ours is to be on alert, making sure that the innovator or the entrepreneur is not going out of line. But as we do that, people are thinking very forward, so you cannot stop them from thinking. So what is important is that let them think out whatever product or innovation that they have. Then the regulator comes to look at what you have thought about, because in thinking, you possibly most often the time do not think about the risk. What you think about is the profit. What you think about is the opportunity. What you think about is where you want to go. You do not think about the risk to yourself. You do not think about the risk to your investor. You do not think about the risk to the stakeholders. You do not think about the risk to the environment. All of these are critical issues that the regulator thinks about. So the regulator is like the safety angel. So I'll call them, making sure that everybody is in line. And that's why people are not so happy with them in the first instance. But later, in terms of sustainability and the future, you cannot but have a regulator. You cannot see anything that you are not as tall enough to see. So if you are behind the wall, there is no way that you can see up above the wall, not unless you have a ladder that takes you there. The regulator is that ladder that looks beyond you, looks beyond your shoulders, looks beyond your head, your eyes, and every part of your surrounding in order to give you some level of confidence and some level of protection that you probably will never have thought about. So that is very, very critical. A child that does not know how a fire burns or the hot of a fire will see a fire and think that it's a game and put his or her hands inside of it. The regulator is that guy that acts as a fireman to tell you, I've been there before. This is my experience. Don't go, because if you do, you'll find yourself to blame.
Thank you so much. You've dropped so many metaphors. The regulator is a, you said, is a safety angel. The regulator is a fireman. The regulator is a ladder that can help you see. So many visuals that, my head was just, as you were speaking, but I was just thinking about all the images that your words sort of invoked. Speaking of sort of regulators and this idea of regulators being sort of a ladder and being able to go, Martynas, let me come to you and ask you a little bit about the situation in Lithuania. Quite a few fintechs in Europe have gone there to set up shop, and my understanding is that there's been a deliberate action on the part of the regulators to cultivate fintechs and innovators into the ecosystem. Can you speak a little bit to some of the deliberate actions that the regulator has taken in that market?
Yeah, sure, Mayava. Many thanks for having me today. It's a pleasure to be here, and our financial sector is super global fair. We can be sitting in Vilnius, in London, in Abuja, in Lagos, and all talk together about matters of global importance to our societies. The intervention by Mr. Agama that we have just had, I think it was excellent, and saying that regulator has to be that fire extinguisher and seeing that everything is going according to the rules. So the referee of the financial market, it's all very true. What previous guests of this event have spoken about, saying that a regulator also has to be enabler and facilitator of financial market, especially when it comes to innovation. I believe it's also super important. And my place of job, Bank of Lithuania, which is a central bank and integrated regulatory and supervisory body in my country, is probably one of the examples. So we have moved into that sphere 5 years ago. Now, 5 years ago, we had almost non-existent financial technologies market. We have some companies, but very few and very small. Right now, we have more than 200 fintech companies and thousands of people working in fintech industry in our capital. So how we managed to get this into our country? 5 years ago, we had very much traditional financial market. Now we have something much more modern. We saw that we have very concentrated financial services providers, very big banks, so to say, and we want more action. We want more innovation happening for the benefit of consumer, for the benefit of small businesses, non-financial companies in Lithuania. And we managed to have that by changing attitude and culture within our organization. So moving on from being merely a watchdog, to be a referee and to see if everybody is doing everything right and risk is being managed up to a maximum degree, we also need to be partners of a financial market participants. And we need to be partners which are helping to achieve sustainable growth, and stress here on the word sustainable, but also innovation, and bring that innovation to the financial markets for consumers. So what we did, we rolled red carpet, so to say, to welcome innovators and newcomers into Lithuanian financial market. Now, Lithuania is very small, it's only 3 million people, but we are part of the European Union, meaning that if you're licensed in Lithuania, you can have your activities all across the European Union, which is hundreds of millions of consumers. So we have established a regulatory sandbox, newcomer program. We have been investing into building trust, building new bodies to speak to market participants, consumer representatives, ministries, which are very important policy-making institutions, and so on. We have decided to switch our working processes in the licensing department to the English language in order to make it more attractive for foreign companies to come, because very few people in the world are speaking Lithuanian language. So we need to have that clarity and to speak the language that you are speaking. In addition to that, a very clear and affordable licensing procedures to make time to market for startup players faster. So instead of waiting 12 or 18 months, you could get licensed much faster now. Additional layer, infrastructure solutions. So in order to make the playing field level, so to say, for different players, you have banks and credit unions on one hand, but you also have electronic money institutions, or as I believe in your context, they are known as money transmitters and mobile money institutions, digital wallets, so to say. So we need to provide common infrastructure. 6 years ago, our payment system was open only for banks, but now it is open for electronic money and payment institutions as well, providing much more fair access when it comes to competition between those players in the market. Last but not least, it's about building capacity inside the regulatory institution. If you want to be supervising modern, innovative players in your financial market, you also need very tech-savvy people. You need to invest in your training. You need to build your own projects when it comes to blockchain, when it comes to open banking, when it comes to subtech, regtech, regulatory technologies. Because if you don't have capable people on the regulatory side, you cannot understand what's happening in the market, and you cannot regulate the risk and provide opportunity for your constituents accordingly. So that would be it from my side for this.
Thank you very much, Martynas. I'm going to open it up to Q&A, and it seems that there have been already a few questions in the chat. I think this one I probably would direct to Oswald if he's still around, asking, what does the startup bill state and how does it protect and propel the fintech industry?
So the question is, how does the startup bill protect the fintech industry?
Yes.
Well,
and
so
protect and propel.
Yeah, so the bill goes pretty much to provide an enabling environment for tech-enabled businesses. So it goes far beyond just the fintech industry within that ecosystem. In my keynote, I made mention to developing I guess as per the name of this event, a common ground and a playing field, right? So you have to have a set of rules that guides the playing field to enable you actually have a situation where innovation going before regulation is actually done effectively, right? So I think in the case somebody mentioned earlier that we love regulations. Without regulations, it would be the wild, wild west. I think to some extent, we still have some elements of the cowboy genome in there until we're able to create rules that helps to guide the rules of play on the common ground, on the playing field, as you want to call it. So the bill does a number of things. One, it brings the right level of attention to the ecosystem by forming a council that has very senior people in government and members of the ecosystem sitting, well, the practitioner side of the ecosystem, sitting and discussing, what makes sense for the ecosystem from a regulation perspective and from a recourse perspective. It also has a sense of what I now call a box, which is the portal, which gives a sense, which gives an opportunity to exchange and match, basically requests from the ecosystem into government agencies. So it streamlines that process as well as brings closer venture cap and other sorts of funding that will be put through this set portal. So and then the third part is a bunch of incentives, as tax incentives and a number of other interesting incentives that helps to create the enabling environment and spur growth, right? So the idea is to grow Nigerian tech ecosystem and to help it grow and build into, we have a number more unicorns and we have a number more mid-range companies that, not necessarily unicorns, but are adding value and creating jobs. And we're able to do startups from our villages. So that's pretty much what the startup bill is intended to do. But once again, I must mention, it's not the end all to everything. It's just one piece in many of things that needs to happen. The key crux of it all that it provides a platform for engagement.
Great, thank you very much. I'm going to direct this question to Dr. Akin. This question says, can regulators objectively do their jobs when they're also interested in being sort of market participants, for example, the CBN and eNaira?
Yeah, thank you very much. A very interesting question. The central bank over the years has always been playing a catalytic role in enabling the innovative space, especially within the payment system. We have not stopped doing that. The Central Bank of Nigeria, and I'll permit me to quickly, discuss a bit of how we have operated in that line. MICA, for example, if anybody can even recall what MICA is with respect to the check clearing in Nigeria, the central bank led the initiative. The central bank encouraged banks to come up with switches and also to ensure that we have interoperability. We also encourage the Nigerian Interbank Settlement System, PLC, NIBS, to have the BVN, which we implemented with the industry. In similar vein, the decision to implement a CBDC is also born out of the need to encourage, to provide an alternative platform for innovation. Recently, you would have read in the news, a number of directors from the Central Bank of Nigeria met with innovators to explain what is expected of them in terms of how we desire that they innovate on the eNaira. So again, it's another platform the central bank has put in place, just as it did with instant payments, just as it did with BVN, and just as it did with switching infrastructure and the interoperability of switching infrastructures in Nigeria, to have operators come up with new ideas and and provide services that will reach a greater number of Nigerians. So the Central Bank of Nigeria is not playing as an operator in the strict sense of it. Rather, it facilitates innovation for the operators by providing or extending infrastructure available to the operators to innovate. I'll leave it at that. Thank you.
Thank you very much. Razaq, this question is from you, and it says, what kind of things what are startups like Cowrywise doing to push for regulations that speak specifically to open banking in Nigeria?
Okay. I think there is currently policy framework around open banking issued by the CBN, and the expectation is that probably in the next couple of years we should have that in full swing. Open banking has a lot of benefits, not just for Cowrywise as a company, but for a lot more innovators within the space. And it allows more inclusion, especially for innovators that might not necessarily be directly regulated by CBN, to be able to have access to probably the same set of data set and innovate on top of that. I think one thing we need to keep doing as innovator is to keep pushing the boundaries of what is possible. What is possible, not necessarily what is possible and what goes against the law, but what is possible by showing that there are benefits to some of this innovation. I believe very strongly that the regulators have the interest of including millions of people within the financial service ecosystem, right? And if there are clear legal ways and admissible means to achieve that in an easy, cost-efficient, effective way, I believe strongly that regulators will put their power behind that. So I think we need to continuously let that shared vision come to play in terms of the outcome of what the innovations are putting to the table and how that aligns with the mandates of the regulators. Once we have that on a continuous basis, I think we'll have the possibility of reducing the friction that presumably exist currently between the two sectors, between the two players.
Thank you very much. Well said. Ashley and Dr. Ola, I'm going to come to you and ask you both to answer this question, which is because you're not a regulator and you're not a fintech, so I think you're you're good in between. What can be done to, if we go in with the assumption that regulation is good and it's good for the industry, I think there's a question in the chat that says, how do you maintain a balance between regulating the fintech space and not stifling innovation? I would love to get sort of your thoughts on that question.
I think that's such an interesting question, and this has been sort of the struggle since since the beginning of banking regulation. And as all the central bank representatives and the representatives of SEC can remember, we've gotten this balance wrong a number of times. So maybe I'm old, I'm a millennial, but the millennials will remember when basically just a few years ago, the global financial crisis happened. And that was a time when sort of the flavor was to do light touch regulation. Why should we have to regulate at all? Why not let innovation thrive? Why not let everybody do what they want to do? And that ended up with an accumulation of risk in the system, which regulators, I think I can say, refused to see or ignored. And it ended up in a lot of people losing their jobs. It ended up in a lot of people losing their savings. And from a healthcare perspective, it ended up in a lot of sorts of mental health disorders and a lot of suicides. So I think, we've discussed sort of regulation, but I think in the context of what happens when there's no regulation, I think recent memory tells us what happens when there's a lack of regulation. But I found sort of the policy direction that the Lithuanian central bank has taken very interesting, because I think that they have realized that we are in a beauty contest for investment, for capital flows, for businesses that want to be domiciled in our countries. We're all in a beauty contest, and capital will flow, and jobs and the economic growth will follow to the most beautiful participant in that beauty contest. The person that has the easiest sorts of regulatory hurdles to scale through, the lowest taxation burden, the easiest place to play, that's where capital gravitates to. And just like China seems to have a comparative advantage, that means they're probably better at most people in the world at manufacturing. And let's say America, for instance, is probably better than most people in the world at making planes. Africa is probably better than most places in the world at doing mobile money and at innovation in the financial services sector at this point in time. So if financial technology is Africa's comparative advantage, if this is what we're good at or most good at compared to other countries in the world, then this potentially is a sector that will create jobs in Africa, will solve all the security challenges that we're currently facing, and will lift people out of poverty. So the approach to regulation, therefore, has to be a very holistic approach where I don't envy the CBN and I don't envy the SEC at all, where they have the very difficult job of being attractive and beautiful to investors and making sure that, like Lithuania, we are putting the enabling environment in place to attract those billions of dollars that will transform the lives of millions of Nigerians, but at the same time, not putting the funds of Nigerians at risk. And unlike the American financial crisis where they could print money and get themselves out of it, Nigeria actually has a larger level of risk because we don't spend dollars, we spend Naira, and Naira is only useful in Nigeria. Nobody is going to take our exported inflation. So if we put ourselves into a financial crisis because of light touch regulation, then the repercussions will be a lot more serious for us. So I think it's using innovative methods like these regulatory sandboxes, like policy innovation, to try and strike that very, very delicate balance of appropriate engagement, and I won't say light touch regulation because it was light touch regulation that got us into trouble, but sort of appropriate touch regulation, but also creating an environment where innovators and investors feel comfortable and want to invest.
Thank you.
Awesome.
Martynas, I see you have your hands up. Do you have something burning you'd like to contribute here?
Yeah, just to complement the excellent contribution of Dr. Ola, I wanted to say that financial stability and consumer protection are the cornerstones of financial system. So we cannot compromise that, you know. Like Dr. Ola, she had excellently gave us an idiom of a beauty contest going on between some countries. But in this idiom, we mean that advantages regarding the, you know, the beauty of jurisdiction cannot be created at the expense of financial safety. So macroprudential narrative and managing the expectations of consumer, keeping them within safe environment, especially regarding all the digital literacy things, ensuring that anti-fraud protection measures are in place and so on is very important. But what we also have to do is to do the risk management exercise together with the market. For example, in Lithuania, during the boom of fintech market, we have significantly strengthened our financial investigation unit, which is a separate organization. We have also heavily invested into building anti-money laundering unit within the Central Bank of Lithuania. So that was done. But in addition to that, we have also initiated some kind of organizational design changes and established a separate PPP, public-private partnership for anti-money laundering, meaning that now we have one organization being responsible for training, for collecting and disseminating the best practices about anti-money laundering measures all across fintechs and traditional players of financial markets. So be ready to innovate when it comes to organizational design as well, because it really pays off.
Thank you, Martynas. Ashley?
Yeah, thank you. I completely agree with the points raised in response to that question so far. Just to add on to that, I think that there is, we are in a very different period, and innovation will just continue to accelerate. And so I think one of the panelists had said something earlier about changes to attitude and cultures within regulators. I think that's key. Regulators shifting really from a rules-based to a risk-based approach, but also really thinking differently about even kind of their interaction with each other. So sometimes when we talk to regulators, sometimes they also express the desire to be engaging with other regulators sort of more productively, recognizing that there aren't as clear boxes as we used to have in terms of the end. There used to be a clearer linkage between the entity and the service being provided. Now there's a little bit more flexibility and ambiguity, and that really means that regulators also need to coordinate and harmonize. I think that just a couple other thoughts on this. For the regulators side, when we talk about fintech and regulation, sometimes the conversation is the industry is innovating and the regulators responding. But it's important to note that the regulators can also really innovate. So we talk about reg tech. There are a lot of solutions that can actually help regulators now kind of detect and mitigate risk more effectively. The regulators represented here in the process of exploring sandboxes, which are really important tools to kind of test innovation in a controlled way, but also give them visibility into what might be coming up in the market. But I think that also the industry can actually play a proactive role in managing risk as well. So I think it would be interesting. I mean, a couple of years ago, I was at a strategy session with the Fintech Association of Nigeria, and there was a conversation around, should the industry be establishing standards? So in a way, helping to identify and mitigate that risk at the industry level, recognizing that when there's risk that enters the industry, all fintechs will suffer, right? If either there's kind of a negative perception by consumers, if there's enough risk that the regulators sort of need to crack down. And then the last thing I would just say on this, kind of striking this balance, I talked before about communication. I think, a few people have mentioned the importance of predictability, particularly, to use Dr. Ollerbrand's term, or was it? Yeah, it was her term around the beauty contest, right? What we've heard is that investors want to invest in this market, including foreign investors. But there are some challenges. One is capacity of some of the providers, which is sort of a separate conversation. But one is also around the predictability of the regulation. And I think that particularly when a law or regulation changes that catches the industry by surprise, those are the things that tend to send the biggest shockwaves all the way up to investors. So I think that obviously regulators need to make changes in response to risks that they're observing. But if we're really communicating effectively, so at a minimum, the industry knows that these things are likely to be coming down the pipeline, then that will help as well.
Thank you so much, Ashleen. Mr. Agama, see you have your hands up as well. You're on mute.
Sorry. Yes, for me, it's important to know clearly, and still an analogy, foolishness abounds in the heart of a child. It is, the rod of discipline that drives it away. Proverbs 22, permit me to use the Bible. The same thing applies to a lot of these institutions, fintechs, and some new people coming into the industry. What their intention or their perception is different. So it's important that the regulator is there always, responsive and proactive, not reactive, responsive and proactive. Besides that, the element of education is so important. We at the SEC have had time to engage with a lot of fintechs, and it will shock you what they don't know. And it's not that they don't know this out of their fault. No, it's because they just don't know it. But with engagement, they're able to understand, and to also surprise you how fast they're able to learn and come to line. So engagement is important, it's very, very useful, and it is nothing, there's nothing wrong for you not to know. What is wrong is that you do not know and you do not make an attempt to know in order to correct your lack of knowledge. So once there is this synergy between the fintechs, the innovators, and the regulators in trying to understand each other, I'm sure the gaps will be reduced. But my simple advice before I leave is the fact that innovators, fintechs, stakeholders must endeavor to relate and to engage. Because if you're a fintech or an innovator and you have an idea, prior to your betting that idea, and you have an engagement with the regulator, you will suffer less stress, there will be less risk, and you'll be more successful. And that is so important in order to create a framework that will allow fintechs grow, allow innovators grow with less uncertainty. Because if you put out something that you are not sure of, and the regulator comes after you, it is not because the regulator is after you. No, it is because you need some form of cover. And that cover is what the regulator intends to provide. Thank you.
Thank you very much, Dr. Agama. Dr. Akimomi.
Thank you very much. Just to add to the discussion around predictability, I think we can set some principles that can aid both parties in terms of predictability of regulation. Consumer protection is for the interest of both the regulator and the innovator. And of course, most important to the consumers of the service at the end of the day. And that is what can continue to ensure that your services are being consumed. So if we both agree that consumer protection is core to both of us at the two ends, then we can agree on how, that anything that will make that better is needed, and that we can agree on how to make that predictable for us. For if a new regulation comes out and is trying to protect the consumer, that shouldn't take anybody by surprise, right? If a new regulation comes up around KYC and AML, we all know that if we allow our financial system to be riddled with AML issues or money laundering issues, then we are not communicating well, or we are not representing our financial system to the rest of the world properly. And it could also instigate instability. If we both agree that we need to protect our financial system for stability and to have that recognition globally that it is a sane environment, then we can all work together and ensure that whatever we are bringing out is seen to be addressing the concerns of both parties. So predictability around AML issues, consumer protection, stability, I don't think should be something that we should see as the regulator not being predictable or not listening to the operators. So anytime a regulation comes up around those areas, it is expected. What we need to understand is, like Mr. Agama said, wherever we are not clear on what the intentions are, we could discuss further. And most of the time, whether you talk about the VVN framework or any other regulation at all, GSI, for example, stakeholders are brought into the discussion and the engagement, and they are aware that those are areas of concern to the regulators. These can guide how we ensure that our regulation is predictable and the innovators understand our standpoints on any matter, or any of such matters. Thank you.
Thank you very much. Dr. Agama, I'm actually going to stay with you and ask the final question before I open it up to asking everyone for their final thoughts. We heard Dr. Ola talk about the fact that, this whole regulatory climate and the environment is almost like a beauty contest. We heard Martynas tell us what Lithuania had done to sort of attract fintechs into the space, into their country. What exactly, what are regulators in Nigeria, how regulators in Nigeria thinking about creating that attractive environment and being able to come number one in the beauty contest for innovators globally?
Thank you very much, Mayo. Well, I believe Ashley mentioned the fact that we're working on regulatory sandbox. This is something that I can assure you the director who I'm representing here is on the front burner for him. And we hope that very soon we'll be having our first cohort for the regulatory sandbox. That's one area that we hope to support innovators within the banking space. Similar to that is the open banking framework that we hope to get started to have implemented very soon. Definitely not in a matter of years, as I think Mr. Razaq said earlier on. We issued the framework earlier in the year. We've been engaging with the industry for the last 4 months, trying to define the guidelines. And this is one other area where we already bring in on fintechs to discuss how the guidelines will be. So it's not about the Central Bank of Nigeria just imposing anything on that space. It's about the fintechs, the banks, and other stakeholders, including EFINA and other NGOs, supporting the drive to ensure that open banking becomes a reality in Nigeria. And once that happens, it spurs innovation further. It encourages more people to come in and innovate. Along the same line, you will recall that there are interventions that the central bank has also put in place to also aid things around innovation. Whether you talk of the Creative Industry Financing Initiative, or you or the ties that we just was launched yesterday. That's the tertiary institution enterprise scheme. These are options that the Central Bank of Nigeria is putting in place to ensure that we continue to encourage innovation here, and we also support innovation such that investors will see our fintechs and our operators as the beautiful bride for their investment. Thank you.
Thank you very much, Mr. Dr. Akimomi. So let me just now, I know we are running quite quickly out of time. Let me just ask each one of our participants for final thoughts on the topic of creating a common ground between the fintechs and the regulators. And I will just start in the order on my screen. Let me start with you, Ashley.
Thanks, Maya. I think it's been a really good discussion. Maybe just to reiterate a few points. I think, sometimes I think we've sort of uncovered the fact that the regulators actually have a lot of work cut out for them, right? We're sort of expecting a lot, and their jobs are becoming increasingly complex. And I think that earlier, I think the first session in this series was around partnership. I think partnership in so many regards is important, but I think that also would be really interesting for the industry to think about how we can also support the regulators and partner as well. At the same time, coming back to the first point I raised on communication, I think it would be great maybe to come up with a few sort of immediate actions that we can start to drive around communication. I mean, for regulators, even just setting up a help desk with a phone that a startup fintech can call could be helpful, because even in the chat here today, and every time we have an EFINA event, somebody who's kind of in an early stage fintech comes on and just starts throwing out questions about, do I need a license for this? What kind of license? What are the capital requirements, et cetera? So we can see that they don't know where to go. That doesn't have to fall solely on the regulator, but maybe also we can look at the industry associations, such as Fintech Association, to create some of those support structures for the early stage startups. As Mr. Agama said, and we've seen this as well, they often just don't know what they don't know in terms of risk and compliance. And I think it's to our collective benefit to steer them. So it'd be great to think about how we can set up some support structures for them as well.
Thank you very much, Ashley. I'm going to actually call from a member of the audience. I think Tony Odiba, do you mind just asking your question live and basically say who you're also directing it to so it can be targeted?
All right. Hi, everyone. I don't know if I'm audible enough.
We can hear you.
All right. So I'm co-founder at RiseVest. First, I want to appreciate TechCabal and everyone for organizing this event. I already posted the questions, but let me just voice it out. So there's a bit of trepidation when it comes to engaging with regulators, but we have actually engaged with the SEC and CBN on multiple occasions, and we find that we align on a lot of issues, right? So my question for Mr. Agama is, how do you signal to startups and people that want to start businesses that you're actually open to engagement? That's the first question. The second one is, so we have countries that are actually fashioning policies to attract Nigerian businesses like startups, right? And we know that same way, startups compete with other startups for market share, countries actually, compete by creating enabling policies to attract these startups and the FDIs that they attract. So how are regulators thinking of competing? I think you sort of answered this a bit, but yeah, those are my two questions. Thank you.
Okay, let me just answer since you called my name, Tony. Thanks for the question, beautiful question. The truth about it is that the SEC has been open to engagement from time immemorial. From the days of Azikiwe, we have been there. right? We started the fintech roadmap before anybody knew it, before people started even talking about it. We called around stakeholders and said, come, let's discuss fintech. Let's discuss fintech in the capital market. Not just us, everybody. Let's come to the party. We had a beautiful party. And what did we do? We produced a great book that we followed up to set up another committee on virtual financial assets. From there, we brought out regulations. From there, we brought out registration of robo-advisory. We brought out regulation of digital stockbrokers. We brought out registration of people like Cowrywise. The SEC has been living up to expectation. I mean, it's either you praise us or we praise ourselves. Fortunately, my name is Agama, about the lizard who fell from the Iroko tree. If nobody praises me, I will praise myself. That's exactly what we've been doing. We have been engaging, we will continue to engage. Our doors are open and we are ready. We are open for business any day, anytime, 24/7. That is why we are government. Protecting the investor, protecting the stakeholders, and protecting the entrepreneur. That's our job.
Thank you. And those are beautiful final words for you to close with. We're open here and we're open for everybody. So please, people in the audience, you heard it straight from the horses, or I should say the lizard's mouth. In this case, they are definitely open for engagement. Thank you so much, Mr. Agama. Martynas, any final words from you?
Yeah, so the final words would be that we have seen very rapid fintech developments in Nigeria and led by public sector as well, for example, CBDC, for example, regulatory sandboxes, and we have to take that into account. What we see all around the globe is that fintech is much more important than ever before, especially in the COVID-19 pandemic times. Fintech, digital finance is a very important piece of our daily lives, meaning that as a sector, and I'm addressing this to entrepreneurs, to private businesses, we have to be responsible in front of consumers. We have to respect consumer privacy concerns. We have to respect many risk management expectations that we get, because we need to move to a more mature fintech sector. And this is actually our slogan in Lithuania as well. So this is not only, for my friends in Nigeria to follow. This is what we are doing right now in order to make our fintech sector more mature and more prone to the high level risk management within each organization and in the sector as a whole. So that's my final word here. Thank you so much.
Thank you very much, Martynas. Dr. Ola?
So I think the big picture of the entire discussion and things that we're all facing today in Nigeria are sort of a decreasing level of real economic growth, a decreasing level of GDP per capita where everybody is getting poorer, high levels of debt, high levels of unemployment. I was in the airport yesterday in Abuja and literally it was packed, because even though people can't afford like a 40 or 50K flight compared to a 5 million naira ransom, people are just making the calculations and need to fly, right? So, our economic situation, we do need a new source of economic growth. And I think technology-enabled businesses present that opportunity to us. So I think the big picture question here is, how do we make Nigeria, together with the innovators, together with the investors, together with SEC and CBN, a global destination for investment? And hardly any African country has been able to achieve this sustainably, but we need to achieve it for our own survival, right, as a country. So how do we do this? How do we make investors? How do we start looking like the most beautiful bride or the most beautiful contestant in that beauty contest? And that is a collaborative approach, really based on 3 pillars: transparency, communication, and engagement.
Thank you very much. Thank you very much. I think there's a bit of an echo. Okay, great. I like the point you said, the transparency, engagement, and you said communication. And, if I, just reflecting on what everybody has said, it's clear to me that everybody on all sides of the table wants to engage. I think finding a way to do that constructively and ensuring, I think it was Razaq that said, the trust equation is there on both sides, or all sides, I shouldn't say both sides, on all sides, is certainly key. Dr. Akinwumi, let me come to you. Any sort of final thoughts for the audience?
Thank you very much. One usual pose I always have for innovators is if you are able to innovate around a lot in Nigeria, then you can innovate around compliance, right? There are ways, innovative ways of meeting requirements. Sidestepping it is not the solution. One of the keys to innovating around it is also engaging with us, the regulators. We're always open. Not that we're always open alone. We also provide infrastructure to enable it happen. We are happy with what BVN is doing in the industry, as rightly mentioned in the opening by Software. We hope we can do more. Where there are innovation or innovative ideas around how to enhance consumer protection, how to improve KYC, AML environment, how to improve stability, we'll welcome those ideas. And we hope to harvest more of those ideas from the industry. So our doors are open, and we look forward to engaging more with you and with every stakeholder within the space. Thank you very much.
Thank you very much, Dr. Akinwumi. Your doors are always open, and you're looking for engagement. Razaq, last but not the least, any sort of final thoughts from your side?
Yeah, more or less like I'll be closing this. I think this is a very great panel. And at a fundamental level, it shows an important direction when it comes to engagement among all the stakeholders. For the fact that we have key regulators on this panel, key ecosystem stakeholders, I think that shows an important step forward. And this is a TechCabal for bringing this together. I think it's an important forum that should be sustained. Having the regulators, the players, and other stakeholders on the same table like this, I think it will go a long way in bridging that gap, that trust gap, because this provides an opportunity to have discussions around burning issues. So thank you so much. It's been a pleasure being here.
Thank you very much. And thank you to all our panelists for their sort of open words of wisdom and their candor during this discussion. I'm going to hand over now back to Chamiwa to close up off. Thank you very much, everyone.
Thank you so much, Maiwa, for excellent moderation. And thank you to the panelists for joining us today. It's been a fascinating conversation and one of the heftiest ones that we've done. The matters are absolutely crucial. And I think to Dr. Brown's point, we've got a really, really important job in making Nigeria an investment destination globally. And a lot of the conversation today is critical to actually solving that issue and how to make that a reality. So thank you so much for your presence. I'd like to thank all the attendees who joined us today. I'd like to thank our partners from EFINA to the Fintech Association of Nigeria, as well as McKinsey & Company, our expert insight partner for this event. I'd like to thank each and every one of the speakers, from Oswald, who did the keynote for us, to Maiwa for moderating, Topsy for the initial presentation, Mr. Musa, Jimoh, Emomotimi, Agama, very, very vivid speaker. We will not forget you all soon today. Mr. Razaq, Ahmed, thank you for joining us. Dr. Brown, Martynas, Pilkis, thank you so much for joining us today. Ashley, Emmanuel, really, really appreciate your presence. Thank you all for taking the time to join us today. There's going to be a post-event survey. So when you close out Zoom, a link will come up for a survey. We would really appreciate your taking the time to fill it, so we have a sense of what was good about this event, what was bad, what you'd like to see at future events. Our next event, TC Live event, is on December 3rd. Please do join us. And a few people have asked about the video from this event. If you go to youtube.com and look for TechCabal, you should be able to, and follow us, we will send you a notification once the video is live. We also do a recap article in our website, so you can look at that. Apologies, Mr. Musa Jimoh, of course, was represented by Dr. Akimomi during this session. Thank you, Dr. Akimomi, for your presence and your very, very thoughtful contributions to it. I must say, actually, one more point I would like to make. I really enjoyed the fact that we had such a robust sort of panel today. It was great to see strong government regulation, representation, strong NGO representation, and private operator presence. We are continuing to organize these events and other kinds of events, and we would really like to keep this conversation going. So we thank you for honoring our invitation today, and we hope that you will honor it again as we kind of keep this conversation going for the benefit of the industry. I'll mention I'll mention a little bit more again about the Nigerian Startup Bill, which is one of those forums where we're trying to improve the engagement between government and between regulators and innovators. For those of you who are not already familiar with it, please go to startupbill.ng. Thank you, everybody. Again, this has been an event put together by TechCabal and the TC Insights team. We thank you all for taking the time. TC Insights, there's some information about us online. Go to techcabal.com/TC Insights. You can find out a bit more about the work that we do. And of course, the TechCabal team, thank you all very much for your work. Our daily newsletter is one of the most important and engaging sort of sources of information on what's happening in tech in Africa. So please sign up. There's a link on the site if you'd like to take a look at that. Thank you all very much. Have a wonderful rest of the day, a wonderful weekend, and we look forward to hosting you for more important conversations about the state of technology in Africa. Have a wonderful day, everyone. Thank you.
Thank you. Goodbye.
Thanks.
Thank you.
Bye-bye.
Bye-bye.